Technology is surging, up 2.32% this week, with a very high RSI of 72, indicating a bullish trend, but valuation risks are rising. This is what every serious investor needs to know about technology right now. Stay with me. Welcome back, or welcome if you are new to Financial Market Oracle. This week, we find ourselves in a market environment characterized by normal conditions, with the VIX index at 18.7, indicating a relatively stable risk landscape. In this context, the technology sector has been gaining attention, and for good reason. As of the latest data, the technology sector is outperforming the broader S&P 500, with the sector ETF, QQQ, posting a gain of 2.32%. This performance is noteworthy, and it underscores the sector's potential for further growth. Given the ongoing trends in digital transformation, innovation, and investment in emerging technologies, the technology sector deserves close scrutiny. With its significant weight in the overall market and its potential to drive growth, understanding the dynamics at play in this sector is crucial for investors. As we dive into the details, it is essential to remember that this is educational content and not financial advice. Let us start with the technical picture and what the charts are telling us. The technology sector, as represented by the QQQ ETF, has seen a notable increase in momentum, with a weekly change of 2.32% and a monthly change of 12.94%. The Relative Strength Index, or RSI, is currently at 72, which implies that the sector is in overbought territory, but still has some room to run before reaching extreme levels. This reading suggests a neutral signal, as it is not yet at a level that would typically indicate a reversal. The trend direction remains upward, with strong conviction, as indicated by the steady climb in recent weeks. Key support levels likely exist at previous consolidation points, while resistance levels may be found at recent highs. The current move appears to be a sustainable breakout, rather than an extended overreach, as it is supported by a series of higher highs and higher lows. A specific technical setup worth watching this week is the potential for a brief consolidation, which could provide a buying opportunity, or a continuation of the upward trend, which could lead to further gains. Now let us look at the fundamental catalysts driving this sector. This week, the technology sector is likely to be influenced by the PCE inflation data and the FOMC rate decision, which could impact the overall growth trajectory of the sector. The key stocks, including AAPL, MSFT, NVDA, GOOGL, and Meta, are signaling a relatively healthy sector, with many of these companies continuing to innovate and expand their offerings in areas such as software and AI. Earnings reports from some of these companies will be closely watched, as they will provide insight into the sector's current health and future prospects. Regulatory news is also likely to play a role, particularly with regards to antitrust issues and data privacy concerns. From a macro perspective, the technology sector is well positioned, given its role in driving productivity and efficiency across various industries. The recent data points to a steady growth in tech spending, which is a positive sign for the sector. The current market regime, characterized by normal conditions and a VIX of 18.7, suggests that the sector is likely to continue its upward trend, albeit with some potential volatility. The longer-term fundamental thesis for being positioned in this space is strong, given the sector's role in driving innovation and growth. As we navigate the week ahead, it is essential to keep in mind that this is educational content and not financial advice. Next, let us talk about the specific risks you need to manage this week. The technology sector is facing several key risks this week, primarily centered around regulatory uncertainty, supply chain disruptions, and elevated valuation multiples. Given the current volatility environment, with the VIX at 18.7, investors should be cautious with position sizing, aiming to balance potential upside with downside protection. Unexpected headwinds could arise from unforeseen policy changes or geopolitical events, which may impact investor sentiment. To manage downside exposure, a disciplined framework is essential, including diversification, regular portfolio rebalancing, and a clear understanding of risk tolerance. By acknowledging these risks and implementing a thoughtful risk management strategy, investors can navigate the complex technology landscape. It is essential to remember that this is educational content and not financial advice. And now for the strategic outlook, where does technology stand heading into next week? This week we maintain a bullish strategic positioning for the technology sector, driven by strong earnings momentum. A key theme to track is cloud computing adoption, which is expected to grow significantly.
Please remember this is educational content and not financial advice.
If you found this video insightful, please like, subscribe to Financial Market Oracle, and comment your technology watch list below.
Until next week, stay informed, stay disciplined, and stay profitable. Cheers! This video is for educational and entertainment purposes only and does not constitute financial advice.
Always do your own research before making any investment decisions.
Past performance is not indicative of future results.